Stocks hit bottom, a look at China's energy sector, and boycott Beijing. Chinese stocks remained down despite a brief recovery from the dramatic lows of last week, but Hong Kong and Taiwan continued to perform better. The Hang Seng Index closed April 8 at 24,311, down 1%, but close to 25,000 for the first time since the start of the year. The Hang Seng China Enterprise Index recovered some, but remains very volatile. It closed April 8 at 13,196, down almost 2%. Shanghai shares are mostly flat, with modest gains of around 1%. The Shanghai Composite Index closed Tuesday at 3,612.54, a slight recovery from its lows last week. At one point it dipped below 3,300. Some analysts said last fall the index was sustainable at 3,600, based on reasonable valuations. The question now may be, can the index move higher if listed companies' earnings start to fall or slow? The CSI 300 index was back up April 8, but not by much, rising around 1% to 3,891. Shanghai B-shares closed at 255.61, April 8, up a percent. Have they hit bottom? Shenzhen Bs remained flat, closing at 560. On Taiwan, the TAIEX closed April 8 at 8,672.85, down some points Tuesday, but already up over 1,000 points since the first quarter 08 lows. At the end of 2007, Beijing released a white paper on China's energy situation and policies. As part of the government shakeup in the new 11th National People's Congress, there is now a National Energy Commission and a National Energy Bureau. A study commissioned for these new ministries was just released by the Chinese Academy of Social Sciences and projects oil consumption in China to grow 62.5% from 2006 levels by 2020 to 536 million tons a year, about half the level of total consumption in the United States currently. To give an idea of how China will impact oil markets into the future, oil demand is expected to grow on average 3.3% a year to 2020, but oil products demand will grow higher at 4.2% a year. Gasoline demand is projected to grow at almost 6% a year, diesel at over 4%, and kerosene at 5% a year to 2020. China is racing to diversify its sources of oil imports, with particular focus on Africa as a supplier. The head of the China Petroleum and Petrochemical Industry Association, Jiming Zhao, told an energy conference in South Africa last month that China hoped to get 40% of its oil from Africa within a decade. To date, China has invested $30 billion in African oil and gas industries. China National Petroleum Corp, or CNPC, the parent of Shanghai, Hong Kong, and New York listed PetroChina, recently began its first deep-water exploration project off the coast of Equatorial Guinea. All Chinese oil majors are busy in Nigeria, the biggest oil producer in Africa and the USA's #4 supplier. This past Sunday, CNPC and the American Chevron Corporation began a joint venture for gas exploration and production in the Chuandongbei area of Sichuan province, a project first reported by the Sinomania show on December 20 last year. The block will be run by Chevron and has 176 billion cubic meters of proven gas reserves of high sulfur type. Yesterday, April 7, the German Energy Bureau and the Chinese State Administration of Foreign Experts Affairs signed an agreement to train hundreds of energy managers in China to 2010. Also in Germany, Siemens Energy announced today a major order of gas pipeline equipment for China Petroleum Material Equipment Corp., another subsidiary of PetroChina's parent company, to expand the Shanjing 2 natural gas pipeline from Shanxi to Beijing. Meanwhile, Sino Uranium and other Chinese companies are busy securing uranium supplies in Niger and Australia to feed China's ambitious atomic power program. Despite exaggerated coverage by mainstream television and newspapers in America and parts of Europe, the Beijing Olympics boycott movement has failed to garner any real support. Last night, a CNN reporter in London told newsreader Campbell Brown that the Chinese were shown pictures of Big Ben and the Tower of London and didn't know about the small group of protesters that disrupted the Olympic torch relay there. Nothing, however, could be further from the truth. Chinese television broadcasted video from London and Paris in great detail, and why not? The disruption of the torch relay in both cities only proves Beijing's point that it is the boycott crowd that resorts to violence and hate. 7 years in, and the Reporters Without Borders-led campaign to derail the 29th Olympiad in Beijing this summer is faltering. Despite funding from American taxpayers via the National Endowment for Democracy, money from Taiwan's Tech Road network, and free publicity from a bevy of Hollywood has-beens, protests have been small, short, and ineffective. Crowds in London and Paris, where spectacular protests were promised by RSF's advanced press releases, barely numbered in 3 digits, and were so small that police appear to have arrested the same guy trying to snuff out the Olympic flame in both cities. The calls for boycotts by politicians Nancy Pelosi and Hillary Clinton in the USA and Nicolas Sarkozy in France are due to their abysmal approval ratings and their need to pander to a disenchanted electorate. The Summer Olympics in Beijing will go on. The Prime Ministers of Britain, Canada, Australia, President Bush, and the Dalai Lama himself, just to name a few, are all against a boycott. I'll see you next time on the Sinomania Show.